Good morning, friends, and a very warm welcome to our webinar on Consortium Lending, Collaboration and Risk Sharing. In today's dynamic financial landscape, understanding how to effectively collaborate and manage risk, whose vast experience and expertise will undoubtedly enrich our understanding. Kalia sir is a mentor to many of today's MDs and ADs, and I'm sure when he shares his valuable insights and answers our questions, will all be very, I say, enlightened with his thoughts. I'm sure after the webinar, you will these will inspire you to explore the benefits of joining our club as a regular member.
Who have spared time to be present in today's webinar, as also to the club members and most from so many sources of information which are available to everyone nowadays, right? About as to how this whole concept of consortium lending has evolved over the years. Well, friends, you may also recall that there was a time when RBI issued in respect of multiple banking and loan syndication, those regulatory guidelines. And then certain set of guidelines were issued by RBI in respect of master guidelines of Reserve Bank of India on exposure norms. You must be aware that 40% of the capital funds of the bank, and capital funds means requirement or credit requirements, both fund-based and non-fund-based, in excess of this particular ceiling that has been prescribed by Reserve Bank of India about the single borrower exposure limits and group borrower exposure limit infrastructure, or meeting the credit requirements for setting up of an infrastructure project. We will not be able to understand and appreciate the import of the whole concept of consortium lending, right? So this is very important that we should be aware about this. Depending on the risk appetite and the kind of experience you have in that particular sector. And they are reviewed periodically. But there is a sectoral limit which has to be there. This will also cover your understanding about risk sharing, which we'll talk a little later. Now, we must understand when single borrower and group exposure limits were introduced, the concept was capital funds. It cannot exceed 20% of the tier 1 capital of the, you cannot take exposure more than 25% of the eligible capital. Now, first I have covered that. Now, this is another set of guidelines that have come into play, which would also force. Now, friends, this particular, whatever I had described would enable you to understand and appreciate to go and seek different lenders for meeting their credit requirements, because banks are regulatorily not permitted to take up exposure beyond certain levels. Okay. Whereas the requirements are very large. And infrastructure includes transport, right from roads, ports, airports, inland waterways. A borrower is either having a multiple banking arrangements or a consortium arrangement, right? Normally, these are the two main kinds of to finance an individual borrower, right? So there is X borrower who is having large credit facilities. A consortium lending would be a collaborative approach where he would approach all member banks. Everything is decided. There is a lead bank concept. There are member banks concept, right? How the appraisal is, we will discuss how consortium actual lending takes place. Credit exposure is fund-based limits and non-fund-based limits. But there is also investment exposure or requirements. He will approach one particular bank and he would ask that bank to carry out the assessment. So what the lead bank does, lead bank would carry out a detailed appraisal. Whenever any such sanction is given, it is always said that the facility will be disbursed only after the financial closure, or what we call complete financial tie-up, right? So that has to take place before whatever he has sanctioned, that would be also disbursed. Normally, yes. But can they differ? Yes. Suppose they find there is something apparently wrong in the assessment, they can say that this is what we believe is not correct appraisal according to us and intimate to the lead bank for carrying out the necessary modification. That is possible, right? So we must try to understand that it is not mandatory. So they will tell these are the kind of the issues that need to be discussed, right? If they are having any one. With those guidelines, where a lot of issues cropped up, a lot of frauds took place, only because there was not, and one part A is there, where you have to narrate detail of banking arrangements from other banks, institution-wise and facility-wise. Every single detail has to be made available. What is the limit sanction? What is the outstanding? What are the repayment terms? What are the overdues? Everything has to be furnished in that. And this particular information has to be provided or in respect of existing lenders at that particular point of time, a irrevocable letter of credit of any, prime bank. So that is an arrangement which is outside the banking arrangement. Many people's aware that information has to be disclosed, renewed, extended, or anything. This is a format that has to be made available. Then there is a quarterly requirement, right? That quarterly requirement is about credit information exchange, right? So these kind of, and what are the major significant, revelations which are observed from the audit report of all facilities other than derivatives, then exposures you have to give for the derivatives. Then there is a portion where you have to give unhedged foreign currency exposure of borrower with different currency wise. You have to give, short, long, every position has to be mentioned in that particular. So this is key credit quality indicators. Then there is exposure details. You have to comment on the basis of the scale given by RBI in its guidelines, right? About, so good, satisfactory, and below par. Sorry, there is no poor. Good, satisfactory, and below par. These are the three rating parameters that they have said, but depending on, they have given examples. If suppose there has been this kind of delay, more than 5 times, 3 times, 2 times. So what is the rating to be given? On the basis of that, they have classified that you can comment on every aspect, either whether it is good or through the exchange of credit information. Then it is obligatory on the part of the lead bank to convene a consortium meeting and discuss about that. But what monitoring, follow-up, supervision, collaboration, that has to come only through this particular thing. Whether that kind of exposure, how it is going to be covered, whether it would be unsecured, whether it would be second charge, whether it would be subservient charge, that is the risk that particular borrower is taking. Their own experience, they may not be willing to take up the additional exposure, right? And they can definitely say, though there is an additional requirement, we are not willing to. So that is again an untied portion. Either one of the banks may take higher than his pro rata share to cover that, or the borrower has to look out for another member bank to join to take up that particular share, which has not been, or the lender can say, if you are not willing to take up, I will induct and take up the entire, whatever exposure is with you, I will try to give it to them. To take up the pro rata share, the answer is no. There is no obligation. The rating, pro rata sharing would change, or some other banker would come, new bank can be inducted, or that bank may not take only that portion. He may say, who is denying, give me the entire portion of that particular bank. So that bank can be exited and a new bank can be inducted. Sometimes we confuse, there is a requirement of 75% and 60%. No, friends, let's try to understand, having talked about all these arrangements, what is the benefit? Because of government guidelines, because of so many other risks that are associated with infrastructure projects. It's not only credit, it is market risk, it is operational risk, and it is also regulatory, government guidelines. Any guidelines can put any infrastructure project just out of. If there is no, availability of coal to that one to fire that plant. He has to get the complete. So there were so many kind of issues that were cropping up. One particular concept, which also is many times talked about, okay, what is the difference between syndicated loans or loan syndication and consortium lending? Lack of making available to the other persons, not having that collaborative approach, not sharing the signs of any, any piece of information that you believe is relevant to safeguard the exposure of all the banks. It is there, we must try to, and kind of, exchange of information that has to take place. So this is, in brief, the whole thing that I wanted to talk in respect of the topic of consortium lending.
All these years, there are 2-3 things which occurs to me, which I would like to suggest that irrespective of.
Thank you, Trinsale. Just let me add a couple of words. Second point is what you are saying about exchange of credit information. Yes, there were gray areas, but since 2009, about signed by CA, CS or cost accountant, about every due diligence, it is as good a Caro report. So guidelines are there. What is important is whether we are following meticulously those guidelines, appreciating. First is appreciation. I must understand it is not a form filling exercise. It is some useful tool in order to enable me to protect my exposure. Unless until that appreciation comes, nothing happens. But all requisite guidelines on exchange of information, I am more than satisfied what has been prescribed by RBI.
Country requires huge amount of funds for infrastructure building. So what is the way out? The way out is alternative investment activities, alternative investment funds. And these alternative investment funds are now being very active in India. It's a new concept, but it is developing, like your nursing, the transport, energy, and water management. This requires huge amount of investment. This PPP model is working. Revenue sharing model. Here also, government is also having some projects under this revenue sharing model. And green bonds, community centers, even the renewable energy, for these also we require huge amount of funds. And probably banks will not be very much interested. In the park, cash flow, very difficult to know what would be the cash flow. So private public partnership and this, crowdfunding, where this risk is diffused. Crowdfunding, they know for sure quality education, climate resilience, say agriculture, industry and services, affordable housing. So private investment may be forthcoming under public-private partnership. Means it will have a big social impact.
That is a topic on which I think your inputs are very valued. And everybody would totally agree with you that it is beyond the competency and capabilities of the consortium banks to finance the huge, infrastructure. And all these revenue models, which are hybrid or toll annuity, all this is a models. But ultimately, actual financing has to be done by the banks or financial institutions.
You can write up your question in the chat box so that I can ask on your behalf, or you can simply unmute yourself and I'll know that you want to ask something. I'll give you an opportunity. In the meantime, sir, there is a question in the chat box. I think you addressed it partially also in your talk.
Normally speaking, loan syndication or syndicated loans.
Good afternoon, respected mentors, Kalia sir and Boy sir and all the mentors. So, sir, one small questions or clarification I just wanted to ask. Nowadays, sir, working in credit, I was heading a mid-corporate branch.
When lead bank is assessing, when you are going jointly for visits, in multiple lending, you will always go separately. A banker should always prefer consortium. Now, how we have to persuade? We should streamline. That is why I said all the requirements of the borrower, they need to be discussed. Like even if for getting pari passu letters, how much time takes place whenever there is an additional way consortium meeting should be attended. a person should first seek the mandate. Sir, this is the issue that is to be raised. They will be the first to exit an exposure moment they see, but your approach would be, let me handle, let me see whether he can come out of this difficulty. It will be a temporary, let me support. That is ingrained in our, they are facing difficulty. When going is good, everything is good. That is, you know, in one of the columns which you write, dealing with us since. When I was a decision maker, if I will see that person is dealing with me from 58, because winter is not number of years. It is because how many economic cycles this borrower has weathered, because this is a long journey. That every single line used to carry a lot of.
So, sir, as you have told, infrastructure funding is the growing needs of the economy, and definitely this is the requirement and burden on the part of the bankers to do it, and bankers are doing, but the experience in the past has been very bad, and some senior bankers have faced severe actions from CBI and all that.
I totally agree with you. Many times, many ministers, many authorities have come. No, we will always do everything to save the innocent officers and we will not take. But you would have seen if a account goes bad, even after 20 years of its satisfactory running, they will call everybody, right from the person who initiated the proposal till the person who has sanctioned the proposal for questioning. That's, we can keep on articulating our concerns. There have been some prefatory steps that have been taken. There is nothing malified that they have done, but still they have to suffer the consequences of. There is but what was happening at that time, my friends, let's also not forget.
I think Kalia sir, your voice is breaking. The connection is having some problem.
Sir, मैं 1 minute लेना चाहता हूँ, फिर I want to exit. I taking the cue from the last 2 questions.
So, there is another question. I have not been able to understand the question fully from Mr. Rakesh Kataria.
Though it is but if it is a side LC, it is a contingent liability. Usance LC where credit is involved. To that extent, that has to be taken into consideration.
And the topic is climate change and banking. And the session will be taken by Dr. Farid Ahmed. Not members of these teams, they can take their individual tickets also for this. And now I will like to thank everyone for the active participation and insightful questions. We had a truly engaging and informative session.
You have to take into consideration whatever is the assessment made at that point of time. So it was decided that apart from now we will take up instead of 1,900 crore exposure, accordingly pro rata exposure of all the member banks would also come down. You cannot overnight switch off. कि भाई आज आपकी limit कितनी हो गई है. If we have to reduce, but then I will have to tell him, okay, within a period of 30 days, you will have to bring down the outstanding to this particular level, which is your revised, available drawing power up to which you can avail the limits, right? So if there is a plan that he can put forward, which all the lenders can agree, a view can be definitely taken. That consortium does in this particular case, right? That is when the consortium meeting takes place, that particular member bank, okay, I mean, this is something which is industry or something. Is there something that can be done in order to deal with this particular default that has taken place? Can we restructure the accounts if it is across the board, right? And third, of course, is that is a last resort, recovery of the, or recalling and going in for all kind of legal actions. But ultimately, rectification stage पे ही सारे ये छोटे मोटे जो default होते हैं एक बैंक के वो खत्म हो जाते हैं. If you will recall, 2009 में इतना डिटेल्ड सर्कुलर आया रिजर्व बैंक ऑफ इंडिया का, उन्होंने सारा मैकेनिज्म उसके अंदर लिखा है. जब ये SMA 0, 1, 2 का कॉन्सेप्ट आया था,